All right, all right. What is up, everybody? What's up, traders? Everybody doing good? I hope so. Bitcoin's going to the absolute moon. We had some news from Mr. Elon Musk overnight, added $1.5 billion to Bitcoin. That's phenomenal news. As I said yesterday morning on the live stream, I was talking about how we came into this area and we obviously found support and then we rose up out of there. Now, this big green candle here is the news of when Elon put the Bitcoin post on his Twitter feed. And then we had a nice little pullback and then we since moved out of that. So if you were a part of yesterday morning's stream, we were looking at 37,919.67 for an area to hold support. You can clearly see that on an 8-hour time frame, you got that support hold. It was absolutely beautiful. So if you are trading the C.T.M methodology, you would have simply waited for the high of this bearish candle to be breached. All right, that would have happened on this candle at 39,983. That would have been your entry, and your stop would have been that low on that bullish candle right there at 37,350.19. Had you done that, you would be well within a 2-to-1, 3-to-1, possibly even a 4-to-1 trade. Now, I told everybody this morning in the chat room, once we got the news, we seen that Bitcoin was absolutely making a pump on this candle. The news broke the wire that Elon Musk had added $1.5 billion to the balance sheet of Bitcoin. Now, I didn't catch the news feed or the article, nor do I know exactly what price that purchase took place. However, I am assuming this is going to run for a while. All right, you can see we got a big monstrous close, breaking the all-time high, hitting $44,000, almost $45,000 with this candle alone. You had a very tiny pullback, and then you're off to the races. There are so many shorts up here that have to cover now. Not only that, there are going to be so many FOMO buyers going. I wouldn't doubt it if we hit $50,000 or even $60,000 by the end of the week. I mean, this is going to be, or possibly going to be, a nice run. You can see the size of the candle on the breakout. So the size does matter, no matter what you've heard. Size does matter when it comes to the sticks, the candlesticks. You can see when we came up into this area originally and made all-time highs, you can see how small the candlesticks are in comparison to this one. That just basically means that the strength of this candle is strong. There is no doubt about it. This is not a false breakout. This will find some support at a higher low area if it hasn't already. All right. So as long as we're trading above 43,148.66, once again, that's 43,148.66. Anything into this area, I will be looking at that as an area for support to hold. All right. That's going to be the first area. Obviously, you have this swing high on an hourly chart that was made. Today's price action is insane. I mean, it is virtually insane. We were just talking about $30,000 Bitcoin being a little cheap just a few days ago. Now we're trading at $46,000. I don't know if you're doing the math, but that's well over $15,000 of price action. This is insane, guys. This is insane. It's awesome. I'm so glad to be a part of it. And I'm so glad to be a part of Jordan Lindsay's Conquering the Market, because he has had everybody on the right side of this thing, even back when I was a doubter very, very long ago. So that's what we're looking at on Bitcoin. There is nothing to do here. Do not be buying up here. All right. This is what I'm trying to drill into you new traders' heads. You guys do not need to buy these breakouts or these tops. Just wait for it to find support. I mean, if you look at even a smaller time frame, like an hourly, you can see that support test right here was absolute gold. You did not close not even one hourly candle below 37,919. Not even one 1-hour candle closed below that level. That is a pretty good indication that that's a possible support test and hold. All right. So that's what you are looking for when you're looking to enter these trades. All right. Support, test, and hold. This pullback into it. Phenomenal opportunity to get long, whether you're swing trading or day trading or whatever. That's how I approach these markets. I strongly suggest you do that as well. All right. So with Bitcoin, we're going to wait to see if we get a test of 43,148, spot 66. Obviously, over the night and through the coming days, there will be new market structures created and new areas to look for support tests. All right, ETHUSD. Now, ETHUSD is not nearly as strong as Bitcoin is, but it is strong. It did make a new all-time high today. We were watching this level at 1519 spot 92. I did have lower areas just in case this area did not hold. I even said not to buy this area yesterday because the way price was coming into it. But if you go into a smaller time frame, you can clearly see that once we broke up out of that area, we took out the last bearish candle in the support test. All right. Once you take that high out and then you don't even come back to test this bullish candle right here, this is pretty brilliant. That's a great entry for a buy long on ETH. Now, I just opened, for anybody that's new here, I just opened a new account on Kraken, and I am absolutely going to start trading the way I trade Forex and stocks in the crypto market. See, I was only in Coinbase, so basically all my trading strategies had to be long only strategies, and you can imagine how much that sucked back in 2017. So Heath has arrived, and we are going to discuss a trade that I took or had a near miss on this morning with Ethereum XBT. So it's just ETHBTC on the Kraken platform. Now, don't get this mistaken. I am absolutely bullish on Ethereum. All right. But I'm an intraday scalper. I look for the daily range expansion, and that's where I am the best. All right. Or that's where I find the most success, in other words. So essentially this morning, we had that push down yesterday. We were watching this area. All right. But you see this push down and a corrective move, and then another impulse move to the downside. Now, Heath, why were you looking at this as a short when it's obviously strong? Well, like I previously just said, I was looking for an intraday, the daily range expansion. So a daily range on a daily candle expansion. We got that. Now, the reason I got short was because we closed an 8-hour candle right here. This closure was below this market structure swing low. You closed below that. Now, remember, when it's a bear trap is when it shoots out of there and exceeds the previous candle's high and possibly takes out the next market structure swing high. That's a bear trap, meaning this was just to get people short for the breakout short, but it didn't do that. This was merely a pullback. All right. I was watching the 4-hour chart right here. You can see my white line. I will go into that and explain what was going on. So basically, I'm looking at this as an impulse leg to the downside. This is just a corrective phase, and I'm looking for an area to get short. Now, if I put this crosshairs right here on the low, not the opening price, but the low, you can see that it comes right in there, almost right at the high. But that is not what I was looking at. I was just showing you. Basically, this is your market structure swing low, the last one put in before it sold off. So when we pushed back up into that area, we retested that area right here. I was looking on a 5-minute chart. This is why I missed the trade, because I'm used to there being tons of liquidity in a market. To me, this right here that's pretty sad. I mean, you got gaps in between 5-minute candles, but I'm not going to judge. However, I was waiting for this market. Once we put in this 5-minute high here, and then we started to trade away, I was looking for this test. So I had a limit sell just under 0.04221. All right. I was looking for it to be triggered on a push up into this area. And then I wasn't expecting that. You know what I mean? I was definitely not expecting that. So I did miss that trade, but yep, I'm on the ball now. So I am here. I have arrived. All right. So we're going to go take a look at Tesla stock as today's Bitcoin movement. What's up? Jordan's in the house. Wow. What's up, everybody? Glad you guys could show up. Camille, Zoli, Stefano, sounds good. Enat, everybody, thank you so much for showing up. All right, so let's go into Tesla and just check out what happened today. So going into a daily time frame, I've got all kinds of nasty stuff going on here. I'm going to get rid of this trend line because even though we did trade above it and then close below it today, essentially I'm not really liking that trend line basically because it looks like you're more in a channel here to me. So this is going to be your upper range of the channel, which is simply going to be the opening price of that bearish candle put in on January the 22nd. And then obviously this was going to be a target for bears, but the bears are not in control of this market. So we are not looking for bearish targets on Tesla. So this 830, this like dead even spot 830 spot 00 level, that was the level where I was looking for a retest and a support hold. You can see that we almost got it down there, but we didn't quite, and we are pushing up. So if Tesla's going to remain bullish, which in all honesty, man, this thing has been going up for so long. I mean, without any, it's just you go to a weekly chart and it's just insane. So you do have some motion, sideways motion going on here. This is absolutely healthy for Tesla's stock. All right. I was absolutely expecting this thing to get a nice big huge bounce like Bitcoin did, but it did not. So it's all good. So this is going to be your range. Essentially 891 spot 29 is the top end of that range. And then this gray line down here at 793 spot 53. While you're trading inside of that, it's going to be pretty choppy, range-bound activity. Wait for a breakout above or a breakdown below. Now, if you do break down below, you do have another area of support coming in at 758 spot 49. That could be a target for you near-term minded traders that are like me and myself. All right. Now, moving on to Euro. This is just going to be a trade recap today, guys. It's just a little bit easier to go live instead of building out the whole video. So let's go down into a smaller time frame chart. So basically we were looking at this last week to see if are we going to be held right here as resistance and then roll over to follow the near term trend. The main trend is to the upside. All right. So this turquoise line is just the high of this candle. So it's just the breakout point. So once we broke out of that area, we have since come back down to retest it. And like I said, this trend line here is currently holding price. There's a lot of stuff going on around this trend line. I could expect it to be a little bit choppy in the next few days around this trend line. All right. So basically why I took the trade this morning. Let me go down into a 5-minute chart so I can show you what's going on. Here, I will go ahead and pull up the picture. My entry was at 1 spot 20237. All right. And my stop was just below this swing low at 1 spot 20189. All right. That's O and alive. That's the actual account. So moving on, basically, we were in this area right here this morning. All right. This was at 3:55 all the way up until when I'm awake and arriving at my computer desk, and I see we have a push down. Now, this white line, if you look over here on this 5-minute chart, you can see that it's this last bearish candle, this 5-minute candle. It means so much. How come? Well, you can see when price pulled up out of there, it did not retest that level, and you traded away, and you stayed away. So as I roll the chart back over, you can see that we finally started to test that area during the London Open and a little bit going into the New York Open. We had a little push up, and then this push down was essentially what I was looking for. So we pierced that area. That area is 1 spot 20227 with this 5-minute closure, and it closed bearishly. But you can see this big, strong bullish candle took out the high of that candle, and we showed a bullish attempt to trade away from the area. Then right back down into the area. This is when I got long. My stop was underneath the wick of this low. Basically, I'm doing this because if I'm wrong on the trade, which I am, sometimes I am wrong, guys. You're going to lose trades. Just get used to it. I knew right away if we break the low of this 5-minute candle, either A, I'm wrong, completely wrong, or B, I'm early. All right. My daily bias was to the upside, even though the daily candle was red. Everything was pointing as a sell. But with Bitcoin breaking out, all right, this is important, with Bitcoin making all-time highs and being absolutely strong. Now, Bitcoin in itself traded against the dollar has no bearing on the DXY itself, meaning the DXY is not weighted in any shape, form, or fashion to Bitcoin. However, if algos are buying up Bitcoin, you are essentially shorting the dollar. That's the way Forex works. When you trade euro versus the dollar, if you get long on this pair, you're not necessarily just long euro, you're also short the USD. So that's why I had a daily bias to the upside. All right. And you can see we traded back down into that area, but we absolutely could not close, not even close a 5-minute candle below that area. And then boom, explosion, boom. Right here was my target. Took 2/3 of the position off. It was a fantastic trade, almost 46 pips on that trade. And I had 2/3 of the position on. My stop is at break even. So whatever happens from here on out happens. I'm looking at this as a possible area for a nice, big, beautiful swing trade to possibly rear its head. All right. If we find support, if this is the daily swing low support level, we could push all the way up into 121 spot 396. That is your next market structure level on a daily chart. All right. That is your next area to test. So as long as we're not closing 8-hour candles below this turquoise line at 1.20114, I will be looking for 121.376, 1.21376. All right. That's what I'm looking for. Now, once price gets up to here, we have to reassess price action because we don't know what's going to happen. All right. So this is how I trade. All right. Moving on to pound dollar. Now, if you remember yesterday's live, yesterday morning, I had this area marked here, which I took from an 8-hour market structure. I will answer the comments, guys. Just let me get through this. That way everything's said and done on my part. All right. So if you were watching yesterday's live stream, you can see that I had this line from this bearish candle right here saying that's an area that I want to see a support test and hold at 1.36810 because I'm absolutely bullish on the pound because the bears have had every attempt to take this thing lower and they have been thwarted every single time. All right. This was the last push down. I really wanted to see if the bears were going to be in control. I wanted to see this swing low taken out on an 8-hour closing basis and a hold below, a retest into an area, find resistance, and roll over. That is when I would have initiated a short trade. But we didn't get that. We pushed strongly out of that area. And I said, watch this area for a support test. All right. If I blow up the chart, you can clearly see a support test at 1.36810. And then boom, see ya. It is gone. Now, it has not purged any liquidity resting above 1.37588, which is all these highs right here that are pretty close to each other. There is a lot of stops up here. So we do not know what's going to happen. This move down, this buy right here for the move up was the high probable trade. Anything up in here is no longer high probabilistic because we do not know what's going to happen to all these orders, how they're going to be filled. Are they going to be sold into? Or are they going to be bought into? We don't know. And CAD yen, finally, so I took a swing trade on this last week on this push down. All right, I got short. The blue line indicates my entry. The red line indicates my stop loss. Now, when we pushed up into this, I took profits because I was essentially just aiming for this high. So that was a nice daily scalp, daily range expansion, took 2/3 of the position size off, and I stopped to break even. And I'm looking for this thing to test 82 spot 834. These red candles do not scare me. I'm not afraid. I'm loving every minute of it. We are looking for the JXY to find some resistance. We're looking for a pullback because last week it was very, very weak. So it's only natural for it to pull back. And you're seeing that within the yen pairs, you do have pullback candles. All right. So moving forward, I'm looking for 82 spot 834. That's going to be my next target, at which point I will take half of the existing position size off. And then I would probably move my stop to below this swing low here. All right. So that's pretty much all I got for you guys. Like I said, it was just a quick trade recap, show you what happened today, and possibly answer any questions that you guys may or may not have. So I'm going to give you a second, or I'm going to scroll back and see if I can see any questions. So let me see here. Just bear with me. Zoli doing the Hungarian language. I had to do a translate from Google to find out what you were talking about. So no requests, huh? You don't want to hear none of the golden oldies or any of that stuff? All right, so that's pretty much all I'm looking for, man. It's just Monday. The week started out great. Started out absolutely fantastic. I mean, wake up, go to the computer desk to watch, see if I could find an intraday opportunity, and then boom, Bitcoin's going to the absolute moon, and I'm loving every second of it. So it was a busy day. Busy day. And Iron Fist, TNX, I got you. Let me do it this way. Make sure I'm not adding it. TNX. Let's go with the SIBO. Let's go with this, the TVC. All right, let me break out real quick so I can see what's going on with this. So longer term, it's obviously in a downtrend. 10-year treasury note. All right, so I guess as long as interest rates are zero, these things are going to keep heading lower. So you found support down here and you've been slowly making your move up. So we're going to look for an area to find resistance. It looks like it's trying to find it in this area here. Generally, when you have big bullish candles on a daily like that, the midpoint range, like halfway in between the low and the high of that candle, will act as a resistance or a support, simply because there was a lot of buying pressure to force it over the resistance level. So this level where it is right now, currently at 1.16, you can see that it is almost dead center of that big bullish candle. Excuse me. That also works on big bearish candles. All right. Usually big bullish or big bearish candles are slicing through an area of support or resistance. So what I will generally do is just go ahead and mark that area just like that. That's going to be the first area. That's kind of where price is trading right now. And then obviously this bullish candle's opening price, you can see how it kind of caught that and then it sold off again. So you are currently testing those two areas. Well, at least the one for now. All right. So if you're bullish on this, what you want to see is if you get back below this 1.15 level, all right, then your next area is going to be right here at 1.13 because it's that bullish candle. Actually, it'd be this bearish candle because it's an uptrend. Apologies. I got confused with these red candles here. So the price has been gapping up and getting sold off, gapping up higher the next day and being sold off. You are testing an area that is a good area. So tomorrow morning, when this opens, it's either going to be gapping above the area or below the area. All right. If you're gapping below the area, that's fine. You can look for this bullish candles opening at 1.13 or 111 to be the next area of support. All right. That's where I would look to see if price tests that and stays there. As long as it's staying above it, then you might have a buying opportunity. All right. AUDUSD opinion. Got you. Yeah, it's looking bullish today. I wasn't paying attention to it, obviously, because I was in the EURUSD trade and Bitcoin and ETH and everything else. So basically, I had a very busy day. You broke above this market structure swing high right here. When you made this down move, your corrective move, and then an impulse, that is an area. Let's get rid of the old lines. I always like to make new ones when I'm analyzing a chart, simply meaning this is going to be my first area. If we start to find some resistance up here, which is possible because you're butting into this area right here, this bullish candle, that price is going to act as resistance. It currently did on Friday's candle, or is this Sunday's candle? Yeah, it's today's candle. Apologies. It's today. So we tested that already and pulled back. You are now trying and testing it again, but we're getting into the Asian session. The Asian session has a lot of false moves. Currently, the near-term trend meaning since the high was put in here on January the 6th is to the downside. But overall, generally speaking, this thing has been bullish since the March sell-off. All right. It has been pretty much a one-sided market, and that's been to the upside. So I believe Aussie's going to do the same thing as any dollar pairs are going to do right now. They're in an area of very, very it's a good area because the DXY is trying to find support, or what we had in the DXY was just a simple push up for sellers to re-engage the market. So moving forward on Aussie dollar, what I would look for, let's go down to an 8-hour time frame. You have a bearish candle right there. All right. Simply bring that that line over there. That's going to be your area at 0.76748. Look for that area to hold as support if you come back down into that area. All right. If you break out, excuse me, if you break out of this area is going to come into play. All right. That's just basically how it works. It's going to tick-tack around in here until either the bulls get more aggressive or the bears get more aggressive. It's going to follow a lot with what the dollar has to do. The Aussie is not as strong as pound because you can see pound versus the dollar is trading at highs. And it's the same with the euro. It's not trading at highs. It's weaker than Aussie. So I like the fact that you're looking at Aussie dollar if you're looking for long trades because it's stronger than the euro. All right. So look for a pullback into 0.76748 as that be your main area of support. Look for that to hold on a smaller time frame basis. All right. J20 Trading Cup. Could you take a look at the NEOUSD chart? I saw something there. Thanks. Absolutely. NEOUSD. Finex, Binance. Let's go with Binance. They've been in business for a while, so they got a lot of liquidity, meaning yeah, it looks good. I mean, it's absolutely constructive. You can see you had this rounded bottom that took place over a long period of time. You've broken out of that area and you are trading higher. Now, I don't necessarily like the wiki action that's in this chart, but that's just cryptos. The lesser liquidity cryptos do a lot of wicks. Let me look at the Finex chart, see if it's any different. Maybe it's a little different. Yeah, that's way better. Way better. All right, that looks a lot cleaner. All right, so moving on the NEO US dollar pair. So you had a nice big strong move today. All right, that's good. That's what you want to see. You came up into this swing high market structure. That is currently what your area is right here. All right, that's 27.16. You can see that you did close a daily above it, but you are now testing it for support right now. So this last swing high might be a good spot to look for support, test, and hold at 26.07. If you break below that, and as long as you're not breaking below 24.91, which is this last bearish candle, you're still in good shape if you're looking to get long this. As a matter of fact, that would be my favorite spot there because most everybody's going to be shook out of this thing if it comes all the way back down here. They're going to be like, oh, this is bearish. It's going to zero. But chances are it's just going to be tested. If you just look at this bullish push right here, you got a boom, big, nice bullish candle breakout right here. And then you went all the way back down. You tested lower, but now you're going higher. So don't get faked out by these bearish candles in a slight uptrend. All right. So you can absolutely be bullish on this thing until you break below that trend line. So you can just do something simple like that. So look for a support test and hold. The first area is 26.07. That don't mean just buy randomly right there. Don't just throw a limit order buy right there. You want to see on a smaller time frame chart, like an hourly, if it's actually catching support. Meaning, is candles wicking below the area and closing above, wick below, close above, wick below, close above? Well, if you get something like that, it's a pretty good chance that you're moving higher. All right, moving higher. Thank you. I'm already long both AUD and GBP. Great job, Zoli. Great job. The pound was off the chain today. That thing moved so good. I took the wrong trade. I took the euro trade. It didn't do nearly as good. Nearly as good. All right. Thank you. Already learned that. When are the stops above where price is? All right. When there are stops above where price is, you mentioned, depends on if it's sold or bought into. Can you explain that? I'm not certain, but I think it's about taking out the stops. Yes, egal. All right. So basically, what I'm talking about is you like right here, for instance, you see these areas, every swing high and every swing low in the market, there are orders resting above or orders resting below. All right. So in this case, the last swing high you had was this bullish candle right here, right? So anybody that got short right here, expecting this to continue lower because you broke below the swing low, so this push up would have been an area to get short. So they did. All right. And banks and stuff, they can't move in and out of trades as shifty as I can. Like I can jump in and out of trades all day long. They can't do that because they have to fill huge orders. And this is why price moves like this, because they sold this pop, boom, price moved down, had a consolidation period up in here. They sold this pop too. All right. So they essentially sold here and then they sold here, right? Got it down, price came back up. So they're working in orders as the days goes on to get a big position. All right. So those orders are still resting there. If they have stops out or retail stops are going to be resting above those areas. So when price trades back into those areas, let me just do this so I'm not. So when price trades back into those areas, like you can see here, we came into it but sold off. Probably didn't tap all of the liquidity, but on this candle, you got it all. That's why you got such a big bullish candle, because all the orders that are resting above those swing highs are buy orders. Your stop loss is a buy order if you're taking a short side of a trade. So by default, by you taking that short, it automatically makes you a buyer at a higher price. Yes, you're looking for the market to continue lower. You're wanting to make profit on a market move to the downside. However, you do have a stop market order. All right. Every stop loss is a market order. It's not a limit order. It'll look like a limit order. It'll be resting above that spot. But if price gets close enough to it, it will be triggered as a market order, because you get charged for the spread going into a trade and you get charged for the spread going out of a trade. So everything up here is buy orders. All right. Makes you a buyer at a higher price. That's not where you want to be a buyer. But that's also why markets turn around on a dime and go back, is so they can trigger that liquidity, because it makes you a buyer at a higher price. So basically, if the banks or the big hedge funds or, 401k funds, any fund manager, any big person or office that has a lot of funds that they use to generate clients' wealth, all right, they're the people trading this market just like you and I are. So their stops are up there. Generally, they take larger stops, and it takes a lot more of a move to squeeze out a firm. But you can see what happened on GameStop. That's what happens when firms get squeezed out of a short position. All right, you're trading at $4 one week. A month later, you're trading at $400. That's a massive short squeeze. And it works the same way when price is going lower and people are buying the market. So this swing low, you got buy stops or sell stops down here, essentially from long positions. So there's a lot of sellers at a lower price down right below this low. You know what I mean? So those are targets. That's exactly what I target. When I'm taking an intraday scalp, I am targeting those areas, not to enter my trade up there. So let's say I took this pullback right here. All right, let me just use this as an example. Say I'm looking at this high right here. This is my target. Why is it my target? Because I know there's a lot of higher buyers up there. And if I'm getting long and I want to sell my position, well, I need buyers at a higher price in order to get out of my long. You see what I'm saying? Because I'm going to be selling to these orders. When I get long down here, which is why you buy pullbacks, and you sell into the liquidity. You sell into all those buyers, all these higher buyers. I want to sell my position to those people. And if I'm going short, it works the same way. I would look at this low as my target, but we'd have to be within price. I'm not just going to short up here hoping that goes. If price action is showing me that it's moving lower, then obviously I'm going to target this level down here because there's a lot of sellers at a lower price. So how do you exit a short position? You have to buy that position back. Well, that's beautiful for me because there's a lot of buyers down, or sellers, apologies. I'm confusing myself. There's a lot of willing sellers at a lower price down here, and I have to buy into those sell orders to get out of my position. All right. So that's why the market zigzag back and forth, up and down, making the broadening formations. If you look on my YouTube videos, or on my channel, there's a video called Quantify Your Trading. It's simply discussing candlesticks. There's only 3 kinds of them. All right. Go check that video out. It'll help you a lot. A lot of people say broadening formations are not very rare. They're very rare in the markets. No, they're not. They happen all the time, just on bigger time frames. It's always happening. Always happening. You got trending candles and then big. Yeah. No, there's only 3 kinds. And that, as a trader, by knowing that, you know, that gives you an edge. It gives you 1/3 of an edge at the very minimum. So just entering a trade and exiting a trade, these are things that you have to learn as a new trader. Direction is only 50% of the actual learning how to trade. Getting the right directional bias, which is what everybody strives to get. Obviously, that's what everybody wants to know, but it's only half. It's only half of the actual trading logic. You need all the other stuff that goes with it. Entering a trade is easy. Exiting, not so much. You know what I'm saying? All right, guys, let me see. Thank you. I'm already about that. I already read that. Got you. All right, guys, that's all. I'm going to cut it short here. It's 8 o'clock. I just wanted to do a quick little video. Hopefully that helps everybody. Yep. If you want, smash the like for me. That'd be great. I really appreciate it. And I will talk to you guys in the chat. Have a great night and happy trading.